Okay, welcome back to the channel. So I'll be giving you an advanced lecture on fair value gaps. So let us start by breaking down how price played out with Euro USD in the past month from December. So this is where the monthly candle opened. We have a gap here and price came lower, started moving higher, cleared out these relative equal highs, and we had a smart money reversal candle here. Price broke lower below this low, retraced back into on Monday. So this was in New York. Price took early New York's high, broke down lower, came back into this. We had a bearish fair value gap, lower again, bearish fair value gap again, extended. Price tapped here in London on Thursday, moved lower. This was PPI. This was CPI. This was PPI. Price did not take sell side here. That would be our drawn liquidity, our objective. And price came lower right before reaching sell side, gave us another setup here during Asia when price returned into this bearish fair value gap. And that is the smart money reversal for a buy model. So let's read this price action in a bit more detail. So we do have an order block here. So that's fine. The fair value gaps have been a clear bearish one, and most of the time it has not reached the most premium gaps. So rather, I'm trying to say this is a breakaway gap. So for beginners, I'm sure most of this is going over your head, but that's okay. I'll have other videos up soon which will help you with that. We also have another bearish fair value gap here, which acted as a breakaway gap, and before price went lower. So what you need to first understand is these fair value gaps give you a clear direction on where the buy model or the sell model might finish or begin. So if we take these relative equal highs as a drawn liquidity, price first consolidates here, and right before it reaches to these relative equal highs, price gives us a fair value gap, a bullish fair value gap, which took liquidity here, came back into this, and moved higher again. So this is your telltale sign that price wants to move higher to these relative equal highs. You can see here price has only taken this one, but the ultimate liquidity objective has not yet been taken. Comes down lower again, we have another bullish fair value gap which supports price and then moves higher to eventually take out liquidity. Then and only then, when price breaks down lower, we expect it to not hold bullish fair value gaps, but bearish fair value gaps to take over. So this can be seen when we look at price after the smart money reversal has taken place. So when we look at price, which is this swing right here, we can see there are not many fair value gaps except this one. But we don't consider this one as it's not in premium. It's not a premium array considering this dealing range. So what do you do then? You just wait. Price comes lower, fills the gap, right? which means it has no more reason to move lower before higher. So price moves higher, hits the order block, takes out liquidity, then moves lower. Now what you can learn from this is that this bullish fair value gap will then act as an inversion, right? So let me explain. We have this fair value gap right here, right? Considering this range, this bullish fair value gap will act as an inversion when price is retested. So if I plot in a line right here, this acts as resistance, which previously acted as support. You can see that price came here, moved lower, filled the gap, moved higher. Now this bullish fair value gap, is this going to hold? It's not, because we have liquidity taken here and we are looking for our low objective here, right? Structure has been broken, gap has been filled. Then when price breaks down lower again, we have this bearish fair value gap, which is what you would see. But you also need to note that we have this bullish fair value gap, which will now act as resistance or an inversion. So then price moves here, it stops right there. And that is algorithmic. Okay, 1 o'clock, 1 to 5, your London session. That's what it does right there. Price comes lower, right? Moves back up again. Now, which level are we looking for? In this bimodal swing, we look for these inversion levels. So if you mark out this one, it necessarily may not work because the algorithm will want to see the bullish gaps in this swing, okay? So we have, just a second, we have this swing, right? This is the bimodal. So price will then note these levels. So these levels will be noted, okay? This bullish one. But this was invalidated, so. Now notice this one. So when I mark out the discount level of this gap, price comes here, taps it right there in Asia. Okay, that is algorithmic. Again, price came here into this bearish fair value gap, and that's what everyone sees, right? You have the dealing range comes here. But this is what price is also referring to. Price comes down lower. We have CPI, so we don't trade this time. We wait for market to what? What are we waiting for market to do when we have our objective as lower? We wait for manipulation higher, which is what price did. Comes down lower again. Test this again on Thursday. This proves that these gaps are not just a one-time thing. It's not supply and demand and not any of that. It's algorithmic. So that's the reason why price need to test it again here. Because if it was really supply and demand, then price would move higher, wouldn't it? Then let's note down another level. Here, the premium and discount levels of the bullish fair value gap. Okay, just look at how price moved around these levels right here. Right, when price is moving lower, fair value gap filled, reverses. Why? Because there's nothing else for price to go below, right? It has to rebalance higher before moving lower. That's what this means. Okay, there's a live example which I'm sharing with you. Comes here again, CPI candle. We have not yet rebalanced enough. So price moves up higher, rebalances it, comes down lower. We have PPI candle, but sell side is not yet taken. Where does this stop? Right? Can you see any gaps here on this bearish swing? You do not, right? I'll just remove this one. Okay, just keep this here. When price is coming here higher, do you see anything to the left here with this range? Do not see anything. There are no gaps here, okay? Especially on this time frame, which is what I'm talking about. But this is what the algorithm is referring to on this buy model, right? See there, closed lower inside this. You can also denote the 50% level here. That just make it too confusing, so we'll just keep these two levels. Comes down here, right there, algorithmic, moves lower. After it moves lower, what do we have here? We have a very good London setup, which is a buy reversal setup after taking sell side, and price moves higher to where? To this level again. Because this was the last, or this was the rather first bullish fair value gap in this buy swing. That's what price is referring to here again. Okay. This, I hope I could get through to you so you would understand what I mean. So these fair value gaps, as you can see, works very, very well if you know what you're looking for. Okay. Now, these gaps is also very much necessary if you're trying to trade without market structure. Yes, I do use market structure, but that doesn't mean that everyone needs to trade the same style that I'm trading in. So how would you use these fair value gaps to determine which direction, or to confirm your buy models or sell models, right? Without market structure. So first, as anything else, you look for your range, which is this high to this low, and price moves higher here, right? This is a retracement, right? This is not a continuation move, okay? How do we confirm that? Because we have a bullish fair value gap filled, right? This is filled, correct. This is not filled yet, right? So if there was a continuation, this is why I always like to see some of the gap left open, okay? That gives you a clear understanding that it is an aggressive move and price wants to move higher. So like, what am I talking about? So this gap right here specifically, just give me a second. This gap, right? It's not filled, right? It's not filled. It's just here and moves higher. This is what I'd like to see. Okay. Price comes, fills the gap here. So that's where you need to be cautious. Moves up higher to optimal trade entry levels, comes lower, and we have a same fractal happening right here. Okay. You can see we have a gap not filled yet, moved higher, but there's a retracement because we have understood that in this range, this was our objective, which price has fulfilled. Now we want price to come lower, back into this and sell off. When you just use gaps, you can use these bullish gaps as inversion levels and the bearish gaps to hold. So without structure, the way I would do it is I'll wait for price to fill the bullish gap first. And then when this low is broken, okay, Listen to this carefully. When this low is broken, the gap which is filled will act as resistance. Okay, that's how an inversion level works. I'll just repeat it again. When the bullish gap is filled and the low which fills this gap is broken, that acts as an inversion level. That's when the algorithm is referring to this level. Okay? Well, that is it for the advanced lecture. If you need any more details into this, you can join my group. I have the links in the description.